Hello everyone, welcome back to Corporate Wala, the channel which helps you get your dream job. In today's video, we are going to talk about ad hoc journals. So if you want to learn about ad hoc journals, what are ad hoc journals, how we pass them, what are few of the example of ad hoc journals, so make sure you stick around and watch this video till the very end. But before we start, if you have not subscribed to my channel yet, make sure you subscribe. That will motivate me to make more such videos for you guys in future as well. So without any further ado, let's get started. So first thing first, what are ad hoc journals? So any journal which is not part of our regular day-to-day activity is known as ad hoc journals. If we talk about in detail, so these are kind of journal entries which are unplanned or unscheduled in nature. Typically, we book ad hoc journals to correct errors, book special transactions, or make adjustment in our books of account. So let's suppose if you go for an interview, how you can answer this in interview, let me give you an example. So ad hoc journals are the journal entries which are unscheduled or unplanned in nature. We pass these journal entries in the books of account to make some kind of adjustment. We book these journal entries to correct errors, record special transaction, and make adjustment in the ledger. Okay, great. Now when you will be explaining this answer, interviewer might ask you what are special transactions. So you can give example of any extraordinary item which is not done in due course of the business. For example, let's suppose anyone sue your business and you have to pay compensation. So these are not the regular activities of a business. So you need to keep in mind by special transaction, I mean extraordinary items. So I hope you know what are extraordinary items, transactions which are not part of our day-to-day activities. These are one time or abnormal in nature. For example, let's suppose earthquake impacted your business due to which you suffered loss. Now, what you will do is you have to record this loss in the books of account. So the entry which you will pass to record this loss, it will be known as ad hoc journal entries. Why? Because you are recording a special kind of transaction which is not normal in day-to-day course of business. Okay, great. Now let's talk about when we are going to use ad hoc journal entries. So as I mentioned earlier, generally we book the ad hoc journal entries to correct the errors in the books of account. This includes booking the journal entry in incorrect account or with incorrect amount or with opposite signs of the amount. In any of these cases, we need to correct it, and the correction journal which we will be posting, that will be known as ad hoc journal entry. So if you recall, in 11th class, you would have learned the topic name with rectification of errors. So all the rectification of error entries are known as ad hoc journal entries, whether it is an error of omission, commission, or principal error. So all these entries will be known as ad hoc journal entries. Okay, now let's move on to a second example of special transaction. What do I mean by special transaction? So special transactions are those transactions which are not regular in nature. These are one time or abnormal in nature. For example, purchase of any asset, sale of any asset, or loan repayment. So these are not the transactions which you do on day-to-day basis. These are the transactions which we book once in a while. So these are not day-to-day transactions. These are special in nature. That's why we call them ad hoc journal entries. Lastly, we post adjustment entries, which is also known as ad hoc journals. So there can be different type of adjustment entries like accrual, prepaid, depreciation, amortization. So any kind of adjustment entry is known as ad hoc journal entries. Okay, great. Now let's talk about how you will identify that you need to book a ad hoc journal entries. So the first thing which you need to do is identify the issue. What do I mean by identify the issue? So you need to identify whether it is a adjustment entry, whether it is a special transaction, or you need to correct any error. So first you need to identify out of these three options, what are the situation you are currently stuck in. Once you are done with this, you can move to the second step, which is going to be determine the accounts. Now, in this step, what you need to do is you need to identify the impacted accounts and prepare your journal where your debit and credit should be equal. After determining the accounts, you can record the journal entries, which is going to be our third step. So you can book the journal entry in our journal ledger. And lastly, you will document the reason of booking that journal entry. You need to ensure that you are properly recording the reasons, because while the audit will happen, they surely going to check the manual journals, which is going to be your ad hoc journal entry. So make sure you are recording the reason properly. So when the auditor will ask you, you will have a proper reasoning of booking that ad hoc journal entry. Okay, great. Now let's see few of the example of ad hoc journal entry to solidify these concepts in our brain. For example, let's suppose corporate wala mistakenly recorded a $500 expense as 5,000, which is not paid yet. What will be our journal entry? So what is the current entry which we have booked in our books of accounts? Expense account debit to expense payable, $5,000 each. But the actual entry should be booked as expense account debit to expense payable, but the amount should be $500 only. So to correct this, what we have to book is expense payable account debit to expense account $4,500 each. So this entry which we are going to pass for correction of this error is known as ad hoc journal entry. So that is all for today's video. I hope you got to learn something from it. If you did, make sure you like it and subscribe to my channel if already haven't. See you soon with another exciting video like this. Till then, take care.